Good afternoon. It is my pleasure to welcome you to Cornell Silicon Valley's Shop Talk, featuring Bill McAleer, sponsored by Cornell's West Coast Alumni Affairs team. Thanks so much for joining us today. My name is Anne-Marie Sanders, and I'm the director of Cornell's West Coast Development and Alumni Affairs team. Our goal today, and every day really, is to enhance and build connections among alumni, parents, and friends from Seattle to San Diego. Let me begin by saying how delighted I am today to welcome Bill McAleer. Bill McAleer is a 1973 graduate of the School of Hotel Administration and earned his MBA at the Johnson Graduate School of Management in 1975. Among his numerous connections to Cornell, Bill has remained active with the class of '73 and serves on the Entrepreneurship at Cornell School of Hotel Administration and Johnson Advisory Boards. He also served on the Board of Trustees from 2012 to 2016 and is a life member of the Cornell University Council. After a long career in hospitality and finance, Bill co-founded Voyager Capital in 1996. Today, he is the managing director. But Bill, before I launch into asking you some questions on our topic, would you just like to say a few words to our group?
Yeah, this is great. Thank you for, first of all, Anne-Marie and Cornell for inviting me to do this. And I'm really looking forward to interacting with everybody today and giving you some perspectives on what's happening with venture, as well as building companies. I've been on some 27 boards and I've seen a lot of ups and downs, plus been executive inside companies. And then ideally, maybe give you some ideas what's going on with the market. It looks like from the polling that there's some interest in trends in the market, and also how are companies handling COVID, which having had some experience in the hospitality industry, fortunately moved to the tech industry, we've been fortunate not to have as much effect as the hospitality industry certainly has with COVID, but I'm familiar with both, so happy to talk a little bit about that. And it's also great to see the geographic spread from the San Juan Islands all the way down to Santa Monica and LA. So I think we've got the West Coast covered here, but looking forward to talking with everybody.
Great. Okay, great, Bill. So I guess let's get started. Before we launch into sort of venture space and the business discussion for today, I just wanted to acknowledge you have served and continue to serve on so many Cornell boards. I'd just like to start by asking, why has that been important to you as an alumnus of Cornell?
I think for a couple of reasons. I've had the fortune to be involved in everything from trustees to, advisory boards. And also the local club here. Actually started getting involved with the local club, and then we developed CEN, Cornell Entrepreneur Network, for the West Coast. And then I got more involved in the Johnson School and Hotel School and so forth. I think a couple of takeaways. One is, it's a really great way to connect with a lot of the alumni and understand what's going on in their heads and how the university should be relating to those alumni. And also was on the board of the trustees during this whole consolidation of the Johnson School and the Hotel School. And so certainly got a lot of feedback from alumni on what they were thinking about that whole program. But I think the other thing that's really quite interesting is the whole connection of education and society and the impact that it has on everything from research, from Dr. Fauci and what he's having an impact in our world, obviously into business as well. And so, I think that's been also very interesting. And lastly, really you learn a lot about how to work relationships, how to work with people. Universities are inherently complex animals. There's a lot of actually internal politics that goes on even in a university. And so it's also, I think, quite interesting to be on a board, many of which are advisory, But the deans and the administration really do look for alumni input, and I think our ability to give back our time is just as important as giving, our dollars. And so I've enjoyed all of that experience.
That's really terrific. And I think you said it, that the Cornell network is so important. And now more than ever, I think, I know that we here on the staff on the West Coast team are really trying to do everything we can to keep that Cornell network and community strong. So thank you for all of your service there. And I can't go on without also acknowledging that your Cornell affiliations run very deep also in your family. So you want to just tip a hat to some of your Cornellians?
Yeah, we are a Cornell family. So both of my kids went to Cornell. My daughter, Lindsay, was in the HUMEC school. She's now an attorney with Perkins Coie here in Seattle. And my son, Billy, is actually living in Menlo Park. So he's down in the Bay Area near you guys. He went to undergrad at Cornell in the art school. And then the great story was I met my wife through what used to be in the old days before you had social media and internet and connectivity. There was a ride box at the Willard Strait Student Union, and you would put a card in if you were driving, and you would put a card in if you're riding. So it turned out she picked my card out to get a ride to Pittsburgh, and that's how we met. So she's a Cornell grad as well, and she's been real active in the human ecology board as well. So we owe a lot to Cornell.
That's great. The precursor to Uber, I guess.
Exactly. Yeah. So that was our blind date. That's how we got started.
That's great. Okay. Well, I trust that everyone's eager to jump right into the topic of the day relating to the realities and trends in the venture capital space. So let me begin with a broad brushstroke. How would you describe Voyager's, your company, Voyager's area of expertise and interest, your firm, I should say?
Well, we're a venture fund, and so that means we invest largely in early stage companies. We're investing at the first venture round, which usually is a point where, and we invest in business to business tech companies. Usually the company has anywhere from, as few as 3 to many as, 40 or 50 people, usually at the stage we invest. We like to invest when the company has a product concept and they are just starting to go to market. So that's the phase that we typically invest at. We have a $100 million fund. We've got about over $500 million under management and 5 funds. Our funds average about 100 million in size. And we'll do somewhere between 20, 25 investments per fund. We'll do about 5 full deals a year, and maybe we'll do some seed deals on top of that. When we invest, what we try to do is once we get involved in the company, we add a lot of value, and we focus on 3 areas. One is really around how do they get their go-to-market right. The second is leadership development. What are they doing to develop their teams? We call it, how does an entrepreneur scale from 1 to many? And the third area is really partnerships. We do a lot in introducing corporate partners to the company who ideally at the right time, partner to help them accelerate. So our strategy is built around what we call a 3-3-3 playbook. So it's 3 geographies in the Pacific Northwest, Oregon, Washington, and Western Canada. So we look at Vancouver and Alberta. And then we really have these 3 value adds. And then we look at 3 sectors, largely internet infrastructure, SaaS, cloud software. And then the third, we do a lot in analytics. We've probably done 15 companies in marketing analytics, and now AI, which is the new buzz term for analytics. So those are the areas we focus on.
That's quite a summary. I was noting down a couple of these features, and I'm pretty sure I heard you say that one of the things you really look for among many in the companies in which you're considering investing in is leadership development. And can you talk a little bit about what that looks like?
Yeah, well, maybe to tell you what do we look for in an actual company. So I told you a little bit
Yeah.
about what we focus on, but what do we look for when we're evaluating a company? And then we can get and that is one part of it. The VC playbook is, big market, great team, and some VC firms emphasize market, some emphasize team, but we kind of try to get a balance of the two. So we're looking for entrepreneurs that we call as learning entrepreneurs, that they're coachable. Ideally, they want to take some feedback, but they also have had experience. Back-to-back entrepreneurs that have a passion for what they're doing. So the leadership piece really has to do with how they think about their business, how they can grow it, how they can get to market. The other piece then is really we need to look at the opportunity being a sizable market. And we're looking for generally disruption of some nature. So it could be a business model that's unique, a different business model being executed, or it could be a really good technology that has, something very unique to it, or it's a unique part of a overall technology flow. So that's important. And then we also look at how they're going to make money. What's their business model? How are they going to articulate that business model? How they price their product? So we typically are looking at 6 factors, several of which I mentioned, but it's the market, the team, the product, what we call the whole product. What are you delivering to your customers? The underlying technology, the business model, and then sort of what are they trying to raise? So what are the terms of the actual opportunity? So that's kind of how we look at a company when it comes in. And then there's a bunch of soft things that we look for, which we could talk about if you want. But
Yeah, I'm sure there's a real dynamic interplay between all of those things. And in a minute, we'll get to how COVID has been affecting that. But before we do, just a quick question also, what would your advice be? What should an entrepreneur look for in an investment partner?
yeah, I think that's a really good question. And it's really important, I think, that if you are raising money, and I'm not sure how many folks here are actually in companies where they've raised or they are raising money, but if they have had an investor in their company, it's a long-term relationship. And so, and this new world we're in now, the dating process is a lot harder because, there would be a lot of interaction that usually the entrepreneur will have with the investors, one-on-one, ideally FaceTime, trying to get to know them, because this is a bit like a marriage, and, you really have to understand the motivation of the investor as an entrepreneur, and also the investor needs to understand what the entrepreneur wants to do with the company and where they'd like to take that company. And you need to really kind of get an agreement on that as you're going into an investment opportunity. A lot of younger entrepreneurs are very excited about trying to get the highest valuation they can. That is sort of a badge of courage. Hey, I got a great valuation. But really, they have to think through, are these investors going to be with them for the long term? And, what's been their track record with entrepreneurs? Do they allow the entrepreneur to grow, or do they replace the entrepreneur? What's been their attitude towards working with company on a board? Do they lead the board? Are they active? Are they passive? So I think these are the things you have to sort of judge, and we have to judge when we're doing this. And now in the COVID world, it's harder because we're doing more of the initial screening through Zoom. So the entrepreneur is, assessing us through Zoom. We usually, there's, 8 of us on a call or something as our team if they're coming to see us after an initial meeting. So that's a little bit more difficult to do. And we actually have made 6 seed and, early stage small bet seed investments, which we decided to do about 10 of these. We made 6 of them, 100,000 each, in each of our geographies, doing Zoom calls. But as far as like our normal investment, which is typically somewhere between, 2 to 4 million, where we want to have about 15 to 20% of the company. We've done one deal so far, and we had met, since COVID started, and we had met with that team beforehand. So what you have seen in the market is there has been some slowdown in what's called the seed rounds of funding, which up here tend to be $3 to $7 million size rounds, where you're doing that go-to-market round. They used to be called Series A rounds, and then in the Valley, those rounds are even bigger. And there's according to the NVCA statistics, there's been about a 25-30% fall off in activity in that stage, And in talking to a lot of my peers, what we're all trying to figure out is the right modulation between Zoom calls, which are very intentional, and it's very hard for you to pick up, subtle things as people are talking, the body language, all of that on a
I
Zoom
mean,
call.
you mentioned it's a long relationship, so it is
Yeah,
important.
versus, and the entrepreneur obviously trying to understand, okay, who's my lead partner? Now I've met a couple other people on the team. How does that feel to me? So what we're trying to do now is do some Zoom introductions and then try to figure out how we do a social distance meeting.
So you've definitely seen, modification in the way of doing business, but you're still active
Yeah,
and
we're still active. Yeah.
pursuing.
And the market up here, there's a lot of new small company ideas coming out, 2, 3 people, 4 people kind of thing. As I said, there hasn't been as much in this traditional what's called full
Seed
seed
round.
round. These are the
Mm-hmm.
pre-seed deals. There's a lot of pre-seed activity.
Mm.
And all this terminology has shifted a little bit over the last couple of years
Is there anything like a mini seed round during these times, or is it still
Yeah, well, that's the pre-seed.
categorized?
That's the pre-seed. So the pre-seeds
Okay.
are like 1 million to 2 million,
Uh-huh.
right?
Yeah.
Usually friends and family. Maybe a venture fund goes in. In the Valley, there's a bunch of smaller venture funds that just do seed investing, and they'll do
Yeah.
50 deals out of a portfolio, and just do 100, $200,000 checks, and that's great. But they don't add any value. They don't. When we do a full investment, we're going to go on the board. We are a minority owner, so our role is pretty much a coaching role and
Right.
a governance element to it. But a lot of what I do and we do is coaching. It's helping the entrepreneur think through all these issues.
And you've mentioned you've served on a number of company boards, and that must, all that experience must lead you to have some advice and ideas about, just in general, why
Yeah.
do you think companies succeed or fail?
Yeah. Well, it's interesting because, as a venture capitalist, half the ratio is about half of the companies we look at, even though we do a lot of due diligence on them. If we do 5 deals during a year, we'll probably look at, 50 or maybe 100, in some depth. We get probably another 300 plans. So it's this big funnel to get down to a decision. But even then, you don't always succeed. I'd say that the 2 reasons that I've seen for failure is you're too early or your market timing's off. And so there's a great idea. We had a company called eCustomers back in the 2000 era that was doing personalization, which is essentially what Amazon does with you now, but a lot of other people had websites wanted to be able to do that. And that company had a very innovative solution, but it was too early because there were dependencies in the market wasn't ready for it. And then the bust hit, and a lot of people just decided not to spend any money at all. So their timing was off. And you see that. The other thing that'll happen is the team's not right. So the entrepreneur can't scale. Maybe the person was a technical person. They can't figure out how to get their product into the market, how to get that early traction. There's an art to that. Or the team, you have team disagreements, or they hire the wrong person. I was on one board where a couple of us knew that the CEO is hiring the wrong stage salesperson, and this happens a lot, where the salesperson's the wrong stage. They're not early stage. They're a more mature company stage salesperson. And he said, well, if I hire the wrong guy, and he made two wrong hires, this is now going to be his third, then I'll put my job on the line, but I need to hire this guy. So we said, okay, you hire him. And unfortunately, it wasn't the right guy. And we eventually had to find a partner for that CEO, because that CEO could not, get that right person to go to market. So
Yeah.
the team dynamics are really important. And that's also a lot harder to read now in COVID, because when I invest in a company, I like to go out and meet with the CEO on every couple of weeks. When I go out, I'll walk around, I'll talk to other team members, get a feel for what the company's doing, get a vibe for, are they all there? Are they excited? You can't do that now,
Right.
because they're all working, on Zoom. Or
Yeah.
even when you're on a board meeting watching all the executives, presenting, et cetera, you still can't quite tell if they're all like happy or, connected, or how's it working. And we are seeing a lot of our companies having to manage that a lot more actively.